Yes, sir. I know bad debts. Hello.
Yes.
Bad debts are kind of debts which affects the business. It is an expense and it is an amount paid by the debtor. It is a loss for the business.
Yes, very good. So when we sell our goods on credit basis, or sometime we give some money to someone, and now we know that money will not be returned, okay, or the debtor will not pay the amount payable, okay.
Yes, sir.
So in that case, this is called bad debts. Means our the debtor is bad. Okay, so our money is gone. It is you can say it is not going to receive it. Okay.
Yes, sir.
Okay. So bad debts means amount receivable which will not be received. Okay.
Okay, sir.
So now it is a loss. It is a loss for the business. So now which bad debts is related?
Which account?
Which account? Nominal, personal, real, or nominal? Which one?
First, nominal. No, personal.
Yes, it's nominal. Yes, it's nominal, not personal. Personal account includes only name of the person or organization. Okay.
Okay.
And all the expenses, income, profit, or loss of business is nominal account. So it is a loss for the business. That's why it is a nominal account.
Okay.
Okay. So if it is a nominal account, there can be two types of situation for bad debts. Two types of situation. The first one, when whole debt is bad, or you can say when whole money will not be received. So whole debt is bad. And in second case, when only part only some part of debt is bad. Okay. So
Hello. No, I can't hear you.
audible to you?
So I can't hear you, sir.
My voice is not clear.
No, your voice is clear, sir, but I can't see anything. Your video is stuck,
Okay.
sir.
Now it is showing or not.
Oh, now I can see, sir. Now it is clear.
And actually, the weather condition is not good. It's raining. That's why I think the network problem.
I see.
Okay. So whenever there is some problem with my voice or video, you should tell me in chat, or you can obviously say that.
Okay, sir.
Okay. So when whole debt is bad, means nothing will be received from those debtors. In that case, the full amount will be transferred to bad debts account, and then we will write the debtor's name.
Okay, sir.
So bad debts account debit to debtors. Being, if name of debtor will be given, then you will write the name of debtor in place of debtors. Okay.
Okay.
So being debtor become insolvent. Okay. So when debtor became insolvent, you can write this sentence only. Okay. So now bad debts account debit to debtors. What is the meaning of insolvent here?
Going mental?
Insolvent means that person has more liability than their assets.
Eh? Okay, sir.
The assets, let's say the assets value of that debtor is 5 lakh, and he has to pay the liability of rupees 7 lakh. Okay. So in this situation, if he sell all of his assets, then he will not be able to pay the liability then also. Yes.
Yes, sir.
So in this case, he will be called insolvent.
Okay, sir.
Okay. So when his amount of liability is more than his assets.
Okay, sir.
Okay. So what you listen first time?
No, sir. I thought insolvent means a person is mental or not able to pay anything.
Yes, that person will not be able to pay his whole liability because his assets is not realizable more than 5 lakhs. So he has to pay 7 lakhs. So this is why he will be called insolvent, that he is not able to pay his liability.
Yes, sir.
Okay. But in some of the situation, you will receive some amount from the debtors, and the balance amount will be called bad. Okay. Will be called bad debts. So in that case, for money received, it will be cash account debit, and for not received part, bad debts account, and two, debtors name account. Okay.
Okay, sir.
Debtor became insolvent. Only part money received from his liquidator. Now, who is a liquidator? So, a receiver or liquidator, we can say. So, liquidator means a person who is appointed by the court to resell their all assets and to pay the liability. Okay, in case of insolvency, court appoint a person, okay, in place of that debtor, and he will sell all the assets of debtor and repay the liability of different persons.
Yes.
Okay, so this is our bad debts. Now, sometime it happens that a person became insolvent, but he is a good person, and he has bad judgment, or say something like he involved in something that resulted in his insolvency, but he is a good person.
Okay, sir. I can't hear you, sir.
Recognize that debtors as bad debts, but after 1 or 2 years he came back and he repaid our liability. Okay.
Can you repeat it again, sir?
Yes, I'm saying that we have written off bad debts. Okay, we have transferred the money from debtors account to bad debts. Okay, so we have removed the name of that debtor from our books. But after 1 or 2 years, he is a good person. That's why he came back and he pay us our money, which is already written off.
Yes, sir.
Okay, so in that case, we cannot record this amount from his name. Okay, let's say a person A. Okay, we have given goods worth rupees 5,000 to A, sold credit basis. So A became insolvent, and due to his insolvency, we have transferred A money to bad debts account. Yes.
Yes, sir.
But after 2 years, he came back and paid 7,000, paid 5,000 to us. Okay. So in this year, we recorded bad debts. But after 2 years, let's say in present 2023, and here it is 2021. So in 2021, we transferred the amount to bad debts account. But in 2023, he came back and paid 5,000 to us. So we cannot record this 5,000 in his name. So what will we do? We received 5,000 from A in 2023. So what will be the journal entry passed in 2023?
2000 bad Cash account debited to bad debts recovered account.
Okay, you know this concept?
Yes, sir. You thought me before.
Cash account debit to bad debts recovered account. Yes. This is our journal entry for bad debts recovered.
Yes.
Okay. Now the next one. One more concept, insurance and loss by fire. I think we have done loss by fire.
Yes, sir. We have done last time.
We have done this concept of loss by fire. Yes.
Yes, sir.
Okay. Okay. So let's discuss a portion of this. Okay, you know the concept of depreciation.
Depreciation. I don't remember, sir.
Oh. So let's take the concept because in a portion it is also given. So if we will understand the depreciation, then it will be better. Okay. So do you have any cycle or motorcycle?
Yes, sir.
Yes.
Yeah.
What is it?
Scooty.
Scooty. Okay.
Yes.
You know how to drive?
No, sir.
Okay. So you try to learn?
No, sir.
No. Okay. Actually, it is not related with your driving. So let's understand the concept. Whenever we purchase assets, okay, so we purchase at a certain price. Let's say you purchased your scooty at what price? Do you remember that?
No, sir.
No?
No, sir.
Okay, let's assume it is 1 lakh. Okay. Okay. So it is 1 lakh. Now you purchased it in 2015. So now in 2023, we want to sell it. So we will get this 1 lakh after selling the scooty.
No, sir.
Yes or no?
No, sir.
No. Can you tell me why?
Because its market value will be less by then in the future.
Its market value will be reduced.
Yes, sir.
Can you tell me the reason behind it? Why the market value will reduce?
The trend will be gone. That's why.
What is gone?
The trend.
Patent?
The trend.
I don't understand your words. Can you write it?
1 minute, sir. 1 minute. Let me find a better way to say it.
Just 1 minute.
Yes. Hello.
Okay, can you repeat your words?
Uh, yes, sir.
Yes.
Because it will be used and damaged by 2 years.
Okay, so you were saying it is used. Yes.
Yes, sir.
Okay. So let's assume that your scooty is not used for this 8 years. Not used. Then
Hmm.
will you get the same amount?
Yes, sir.
Okay. Then what is the reason? Because you told me that due to use, its price is reduced. But if you haven't used it, why it is reduced?
Because it is very old, sir. Very old, sir.
Yes. So you can say time.
Very
Yes or
old.
no?
Yes, sir.
Time factor, because that's why it is old.
Yes, sir.
Okay. Now, one more thing. You have seen the mobile price 5 days before, let's say, uh, from today, 5 days before, the mobile price was 30,000, but in showroom, now the price of that mobile is 20,000. After 5 days, it is reduced by 10,000. You have seen this happening?
Yes, sir. Yes.
Okay. So can you tell me, in 5 days, we cannot say it is old. Okay. We haven't used it. So it is also new. In this case, why the price, the value of that asset is reduced?
Because
Because
nobody is buying it, so they just want to reduce the money.
nobody is buying it.
Yes, sir.
Okay. I'm telling you the reason. It happens because a new mobile with more advanced feature has arrived in the market.
Okay, sir.
Okay. So a new mobile with advanced feature has arrived in the market at the same price, like 30,000. Okay. So in that case, no one will purchase that uh, phone, the previous phone, at 30,000. That's why mobile company reduced the price of that phone to 20,000. Okay.
Okay.
So new technology is also the reason behind reduction of price. Okay. And the fourth one is damage or accident, you can say. So these are the four reasons that assets value is reduced. Okay.
Okay, sir.
Due to use, due to time factor, new technology, and accident. So these are the four reasons for reduction in price. Now, this reduction is called depreciation. Is that clear? This reduction is called depreciation.
Yes, sir.
So whenever a value of assets is reduced due to any reason, or you can say due to these four reasons, this is called the reduction in price is called depreciation. And depreciation is expenses for the business.
Okay.
So a reduction in price of an asset is an asset due to any reason is called depreciation. It is an expenses for the business.
Sir,
Yes,
why is it an expense? It should be a loss, right?
you can say it is a loss, but whenever we say that price a reduction in value of assets, okay, it is not like that our asset is gone at one time. Okay, this is a gradual process, a systematic process. In 1 year it is reduced by 20,000, in second year it is reduced by 20,000. Okay, we cannot know for sure that how much amount will be reduced from the assets. So what we do, we charge a certain amount every year from that asset. Okay, like if you purchased a machine of rupees 5 lakh, so let's say we take 10% every year as depreciation, means 50,000, 5 lakh into 10%, 50,000 will be reduced, will be deducted from that machine value every year. Okay, so that's why it is treated as expenses.
Oh, okay.
Whenever we talk about loss, loss is not a gradual process. It happens one time and done. Yes.
Yes.
Like loss by fire, like bad dates. So depreciation is systematic process. We charge depreciation in each year. So it is our expenses.
Okay.
No. So reduction in price of an asset is due to any reason is called depreciation. It is an expenses for the business. Now, what will be the journal entry for depreciation? First of all, what will be the journal entry for purchase of an assets?
Purchase of an asset.
Okay, let's say you purchased a machinery for rupees 5 lakh.
Okay, sir.
What will be the journal entry?
Well, how much am I buying?
5 lakh.
For 5 lakh. Okay. In cash?
Yes.
Okay.
Yes. Actually, in this transaction, I didn't tell you any name. Yes.
Yes, sir.
Yes. And I also didn't tell you that it is on credit. So in these type of transaction, always assume that it is on cash basis.
Okay, sir. Sales account debtor to missionary account. To missionary. Is it correct? Oh,
No, it is not correct.
We purchased. Okay, we purchased. Okay. So cash account. No. Missionary account debtor to cash account.
Very good. Machinery account debit to cash
account.
because we purchased machinery. Now, can you tell me why we are not writing purchase account debit?
Purchase account debit. Because the machinery is given, that's why.
Yes. Whenever we purchase, we buy goods. Goods means which is our business. Okay. So whenever we purchase goods, we write purchase or sale in that case only. But whenever we buy some assets, okay, or sell some assets, then we have to write the name of assets if it is given.
Okay, sir.
So machinery is given here. That's why we will write machinery account debit to cash account.
Okay, sir. Hello.
Yes.
No, sir. No, sir.
Machinery account debit to cash. Now, what will be the entry for depreciation charged on machinery? Now, depreciation charge at the rate 10% on machine. So the value of machine was 5 lakh. Depreciation is an expenses. Yes or no?
Yes, sir.
Yes. So expenses will be debited or credited.
Expenses will be debited.
Debited?
Yes, sir.
Yes. Yes. So depreciation will be debited.
Yes, sir. Depreciation.
And what will be credited here?
Machineries will be credited.
Why machinery?
Because why not? We are giving. That's
Actually, machinery will be credited because the value of machinery is reducing, is decreasing. Okay, so it is like our machinery is going.
okay.
When we charge depreciation of 50,000, it means now our value of machine is only 4,50,000. The value was 5 lakh, but it is now reduced by 50,000. It means our 50,000 rupees machine is gone.
Okay.
That's why it is credited here. So this is our assets and depreciation. Do you have any doubt in this concept?
No, sir.
Okay. Now, do you know about the combined entry? You can say entry which have two debit or two credit. Compound entry it is called.
Yes, I have not learned, sir, but yes.
Yes. The compound entry where we have to write two debit or two credit in entry. The debit or credit side. entry. So it is called compound entry. In compound entry case, you have to think, you have to see that both sides are equal or not. Okay, because there are more than two accounts. That's why it is debited by two accounts or it is credited by two accounts. So there is more than two accounts. Okay. Now, if we have more than two accounts, then how will we decide that which account will be written first?
Depends on the question.
Okay. Which account, real, personal, or nominal? Which account will be recorded in journal entry first?
Real account.
A real account. And the second is
Nominal.
nominal account. The last one is personal account. So in case of compound entry, we have to think about that a real account is debited or credited. Same with the nominal account, it should be debited. Is there any or credit? Okay.
So can you repeat it again, what you just said?
So we will see that is there. We have to see after writing real account and nominal account, we have to see is there any difference between the amount of both sides. Let's say on the debit side it is 1 lakh and on the credit side it is 80,000. Okay, so the entry is not complete yet. Yes or no?
Yes, sir.
Because both sides should be equal. So 1 lakh on the debit side, it means 1 lakh will be on the credit side. Then entry is complete. But if 1 lakh is on the debit side and 80,000 on the credit side, then entry is not complete. You have to write some account on the credit side for 20,000 because 80,000 is on the credit side. So if we write 20,000 on the credit side, then it will be equal to the debit side, that is 1 lakh rupees. Okay. Okay. Now, the next thing is in compound entry, you can see we have done some entry related to this, like cash account debit, discount account debit to a account or to someone named A. Okay.
Okay, sir.
This is called compound entry. The two accounts can be on any side, on debit or credit. Okay, so this is our compound entry. The next thing is, what is bank charge? What is bank charge?
Bank is charging us money.
Bank charging us money.
Yes, sir.
Okay, and why bank charge money from us?
Can I use the same example you used in the previous class?
Yes.
Okay. When we give them a check and that check is disowned, they give us back and we have to pay them money because bank is charging us money.
Yes, very good. Actually, this example we discussed in our previous class.
Yes, sir.
You remember this example? Yes, good.
Yes.
Okay.
Yes, sir.
It is very good that you remember. Okay. So bank charge is, yes, you told me correctly that whenever there is a dishonor of any check, then bank charge some money from us. But there is something else, okay, apart from dishonor of check, there is some other transactions also, uh, other services that bank provide us. For those service, bank will charge some money from us. Debit or credit card.
Huh? So can you repeat
Have
what
you
you just?
seen a debit credit card? Have you have you seen any debit or credit card?
Yes, sir. I have seen that.
Yes. So debit card or credit card is provided by the bank.
Yes, sir.
So it is not free of cost. They give you debit card and they charge annual expenses for that debit or credit card.
Yes, sir.
Okay. Whenever there is a transfer of money from one account to another account, this is a service provided by the bank. So for this service also, bank charges some money.
Oh, yes, sir.
Okay. So you open an account in the bank and they give you debit card. So in India, actually, they charge 113 rupees, 120 rupees around for Visa debit card. Okay.
Okay.
So there are some other services that bank provide. They charge for these services. That's why it is called bank charge. Now, bank charge is expenses for us because it is deducted by the bank from our account, and it is not one-time expenses. It is regularly deducted by the bank. Okay. So bank charge is an expenses and it is not paid in cash. Bank generally deduct this amount from your account. So cash is not going. Always in case of bank charge, bank will be credited. Okay.
Okay, sir.
Okay. Now this is our bank charge concept. One more thing before doing any question, one more thing that we need to cover. We'll discuss the question of these topics in our next class. So you should understand this. Do you know the concept of cost, profit, and sale?
Mm, 1 minute, sir. Let me recall 1 minute.
Okay.
Sir,
Yes.
hello. I don't know, sir.
Okay. So cost means whenever there is a business person and who is doing business of anything, let's say, yes, this mobile phone. Okay.
Okay.
So they purchase it at a different price. Yes.
Okay, sir.
And they sell it at different price. Yes or no? Or
Yes,
you
sir.
can say, or you can say they incur a different cost for producing this mobile phone and they sell it at a different price. Let's say their total expenses for producing a mobile phone is 20,000 and they are selling it for 30,000. So the difference between these two, that is 10,000, is profit. Okay, so you can say whenever we take cost and we add profit in cost, we get sale price. Okay.
Okay, sir.
Okay. So cost plus profit, sale price. You have purchased, let's say, not in business sense. Let's say you have purchased a pen. Okay, pen of rupees 30, and you don't have any use of it, so you wanted to sell. Now your friend is ready to give you 35 rupees because it is a imported pen. Okay.
Okay, sir.
Or you can say it has some unique design. So she want to purchase it for rupees 35. Now you have purchased it for 30 rupees and you sell it at 35. So there is a 5 rupees profit.
Yes, sir.
So this is a simple concept of cost, sale price, and profit. So when we add profit in cost, we get sale price. Okay.
Okay.
Now in the question, sometime you will get like cost is 80,000 and it is invoiced at 25% profit. Now, if it is invoiced at 25% profit, can you tell me what is the sale price?
1 minute, sir. Let me just. One lakh.
Sale price is 1 lakh. What is the profit?
Oh,
What is the profit?
25%.
25%, not in percentage, I'm talking about amount.
Yeah, 25,000.
25,000.
Yes, sir.
So the total sale price is 1,05,000.
Yes, sir.
Okay, 1,05,000 is not correct actually.
Oh.
$80,000 and the profit is 20,000. So the sale prices okay, I'm repeating this sentence again. So in this case, the cost is 80,000 and the profit is 25%. So we will calculate profit like this. Profit equals to 80,000 into 25%, that is 20,000. This is our profit. So we will add this 20,000 into cost. So we will get our sale price. Is this clear?
Yes, sir. Clear.
Okay. So do you have any problem in today's class? Actually, our class is disturbed 2 times during. So I think it's better. Actually, there is more issue in network now. So do you have any doubt in any of the topic we discussed today?
No, sir. I don't have any.
Okay then. So